Our next panel is all about the future of identity verification in the age of Web3. I'd like to introduce the session lead today, Anna Niemira, who's the head of partnerships and strategy and innovation at Lambert and Company. Over to you, Anna. Take it away.
Welcome to the next NCFA session. I have a pleasure speaking with John Gruetzner from Syngrafii Inc. and Mr. Erik Zvaigzne from Convergence.Tech. Mr. John Gruetzner is CEO of the company, and Mr. Erik Zvaigzne is a VP Products and Innovation. Gentlemen, welcome to this session, talking about FinTech and Web3.
Great to be here. Fantastic.
Web3. This is something new. FinTech we know for a longer period of time. And recently I came across information that Elon Musk and Jack Dorsey argued that Web3 is nothing more than the new marketing buzzword. We'll see if this is the true, if we are agreeing with those two gentlemen, or if it's actually a completely new case for the Web3, which can be used in advancement of FinTech technology as well. John, your company specializes in e-signature, in the documentation, placing the ink on the paper, but in the virtual world. How we can combine Web3 and FinTech in advancement when it comes to identity recognition and at the same time fulfilling their compliance requirement when it comes to identity?
Well, there used to be an old TV ad for certs, which was 2 minutes in one. So I think that the digital world and the human world have to learn the best practices of each other. The concepts of a contractual consent, which is the foundation of FinTech, obviously, it doesn't matter what you're doing, whether it's an insurance policy or a crypto bank, you have to have a high confidence that the people on both ends of the transaction haven't been intercepted, but also have maintained their identity in terms of who you're dealing with. And even there's evidence growing that even banking systems are being intercepted and deposits are being taken out of, I can't name the company, but deposits are being taken out of what is a normal interactive banking transaction because people are intercepting things. So I think we have to learn from the best of what Convergence.Tech is trying to do, and we also have to be predictive. The real challenge is going to be balance consumer convenience and privacy concerns with the cost of that transaction, with the regulatory framework as it exists, maybe behind what the people who are carrying the risk prefer or need to actually do a transaction. The perfect example is what's happening in real estate in Canada today. During COVID, there's been a large number of fraud cases, and the Law Society, and certainly in Ontario where we are, is pushing forward new compliance rules. But will those stay ahead of criminality? That's going to be the question. So I think that we're on the cusp between an old world of high trust and the value of a signature and a new world where we're going to need both.
Well, with us being constantly online, from social media to signing the documentation, there is a huge problem when it comes to cybersecurity. So, Erik, how we can combat the security fraud?
Sure, and I think that is one of the opportunities that exists with some of the concepts even coming from Web3 and some of the architecture patterns as well. Regardless of how it's done, it doesn't always need blockchain. That's sort of one element to clarify, is Web3 does not necessarily mean blockchain for everything, but it does usually mean user ownership of data in some way, user ownership of signing keys or user ownership of information and those sorts of things. And that's actually the opportunity, I think, that when you start applying some of these patterns into industry and looking at what's being deployed in terms of digital identity wallets and some of the work being done by governments in Europe, in Australasia, Canada to some extent too. You're really setting this up to have a true or proper digital identity that people can port between systems. So the two ways that helps is in one sense, when you're actually storing identity information on the person's device in their identity wallet, just decentralizing the storage of that information makes it a lot safer, because now you don't have one honeypot of data as you did traditionally when you just start storing everything in a database, and then you need to put all kinds of protections in and around it because of the risk of breach and so on and so forth. So that's that one pattern or one element. And I think the second is just, again, with an identity wallet, then you presenting an identity, and then you also having a signing key that you own and control on your device. It really kind of splits up a digital identity into two pieces, which is, again, something that has the potential to reduce breach risk, because if someone happens to extract the data or the information based on old world identity documents that are very easy to forge and duplicate and copy, you won't be able to do that anymore when you start looking at new form digital identities that require you to also digitally sign things. So I think there's a ways to go yet. It's emerging as a technology, so this isn't something that's going to like change overnight, but it's something that I think definitely has the ability to improve privacy and improve risk in terms of identity fraud and identity theft and data breach if these patterns are deployed.
Erik, you mentioned actually that we can protect our identities with a key, but how we can protect the key?
Yes. So in that sense, that is one of those challenging things in and around user experience, where if you say it's on your own device, it's in your identity wallet, really then the key is you can't lose your phone. That's one of those challenges that you have to sort of balance on a user experience perspective on. If it's truly decentralized and totally decentralized, you are responsible for holding onto your own key and your phone and everything like that. A lot of people aren't necessarily ready for that, or that's not right for a lot of people as well, when they're not of the mindset of, hey, I can protect my own data, I can not lose my keys, those kind of things. And that's where I think there is actually an opportunity here as some of these patterns emerge, as some of these wallets emerge in the financial services sector and fintech, to start spinning up new services around doing things like holding people's identity keys or delegated storage of wallets or those kind of things to make it a lot easier. Similar to how you would trust a bank to store your money, you might also trust them as a service provider or a fintech provider to store your identity and then help broker some of that risk and broker some of those transactions. So that's that other element, I think, that's emerging as well on that. Yeah, right now it's tricky if you have to protect your own keys, but services, I suspect, will be emerging in the future that solve that. And that is an opportunity, I think, for fintech and financial services, simply because they usually do have a requirement for pretty good IT hygiene in the protection of information and data.
Well, ladies and gentlemen, we have to hold on to our funds, that's for sure. We have to make sure that nothing is stolen and protect the funds. But John, do you see the same situation when it comes also to fraudulent documentation, not only our identities and information about us, but also how we can protect the documents which we sign from being stolen or being defrauded?
I think I'll start off in just reinforcing. I think that the interesting thing about the phone as a central part of identity is that, unlike your driver's license or your passport, if I actually take your driver's license or you drop it out of your wallet, as you might be doing, and when you're using it, you might not notice for weeks or months, or but if your phone disappears, you usually figure that out in a rather short period of time. So your ability to respond is obviously impressive, because you can cut the number down, and then obviously in Apple and Samsung and others have their own encryption process on top of it, and then you have whatever Erik or his counterparts are building into the system. For documents, I mean, from a traditional point of view, whether it goes back to the tables at the Magna Carta or the tables at the signing of the formation of the United Nations, or even when Queen Elizabeth met Trudeau to bring the Canada Act to create our constitutional prerogative in Canada, the signing of face-to-face and the value of a wet signature is important. And that's why we incorporated an ink sign a digital version of using your own handwriting. We call it the human right to sign, because ultimately that is the most important form of consent that any individual can have. You can theory, and as Chat GPT and others become prevalent, or maybe the 1,300 people asking for a moratorium will get their way short term. The ability to attack, and the impressive part of criminality is their ability to stay ahead of regulations and stay ahead of technology, is going to be a real challenge. So I think what we believe is going to happen in a wide variety of existing and future forms to be some of them that we're looking at, some of them not even invented, and some of them a combination of what exists today in terms of retinal scans, iris scans, biometrics of handwriting, the biometrics of voice recognition, are going to create what I call a digital avatar, and that will ultimately be your defense mechanism against identity. And that's going to be a complicated, I think, process over a period of time, and it's not going to happen for a variety of reasons that we discussed initially from a regulatory point of view, but ultimately I think it's where we're going to end up, and that's going to have a wide variety of functionality. And I think the real challenge, of course, will be to balance the cost of that and the convenience of that. And then there's the danger, obviously, even in some of what Erik talked about. The Flink system in Canada can go into your bank account and verify that you are you. But then if the bank somehow was duped, which is happening, where do you begin and end the beginning of your identity? We all know that certain people and still believe that President Obama was not born in Hawaii, despite the Secretary of State's letter of attestation, a copy of the birth certificate, copy of hospital records, and copy of the birth announcement in the newspaper. So we're dealing in a world that's very, very skeptical on one side, and we have to maintain, ultimately, if we don't maintain trust in society, we have a real problem in terms of any commerce. But I think the other challenge that we have as an industry is to not repeat some of the mistakes that the internet in its first wave of social media did to attack culture and attack trust. We don't want to do that to the individual, because ultimately the individual is why we're all here, you and I, and the three of us, of course, and the rest of the audience. If we lose our identity through some digital birth of Aldous Huxley and George Orwell, we're all in danger. And I think that's ultimately our responsibility as professionals to come up with the right solution.
Well, this is definitely why also artificial intelligence plays certain role in it as well. Certain things we would like to have it protected with it, but as you mentioned, that avatar, it's a little bit scary at the same time, having your own identity and your own personality being cloned. But with that, saying that, at the same time, this is what the technology is all about, that we are just going to progress with that. And saying that Convergence.Tech, Erik, was one of the first companies which used blockchain technology when it comes to working with organizations and governments to the identity. So how are you exactly planning right now, or how you can see Web3 being implemented with blockchain technologies, and how that can influence our identity?
Sure. Yeah, and this is one of those things where I think exactly because there's issues around data sovereignty and privacy rights, increasing legislative powers and things very similar to GDPR that kind of give personal protection and data rights back to people. A lot of that is pushing people like governments to re-examine policies, to look at their role in providing identities. And that's where this next wave of technology that is emerging right now is really much more like providing identity as an infrastructure. So as we all get digital driver's licenses, as we all get digital identity wallets and those sorts of things, it is very much having like a digital avatar in that case. Some of the modern tech is designed to be able to protect privacy and sort of add more enhancements there. But I think the fact of the matter is, sort of as John was saying, I mean, there's always, the criminals are always one step ahead. They're always crafty in terms of how can we actually exploit a system. And the true thing is, it doesn't matter how good the technology is. People are usually the weakest link in most identity systems, where they can be duped or defrauded or those sorts of things, or it can get what might be a tamper-proof credential that is high security and unforgeable, but they might have earned it in some kind of untoward way. So that's kind of one of those challenges there. The technology itself, I would say blockchain is not a prerequisite, again, for a lot of decentralized identity work and a lot of identity wallets. It's just one way to be able to coordinate systems like these and give people their own signing keys and their own wallets and the like. It's certainly a sector where I think you'll see a lot more early adoption. If you start looking at some of the crypto banks and that whole element of sort of the industry, they are behind this whole idea of reusable KYC or being able to bring your own identity tokens and those kind of things, simply because they are already in a fast-moving industry. But I think the adoption in enterprise and traditional banking and finance is going to take a little bit more time, just because it's very complex in terms of regulations and what's required in terms of informations and checks and proofs to de-risk transactions and those sorts of things. Not to mention, it's just very different as far as sort of like a technology pattern is concerned. When you start talking about bringing your own identity, it's almost like bringing your own device. When that became a big thing in the workplace, it's like, how do you adjust IT policy to deal with that? Because not a lot of people are necessarily ready or familiar with using that tech. But the truth is, it's coming anyway, and a lot of these systems that are being based on all these protocols and identity pieces are just something that's going to sort of end up in society. And then when your customers start showing up with these digital identities, banks and businesses are going to have to adapt to be able to work with them.
Mm-hmm. John? Syngrafii focuses on e-signatures, but at the same time, when users need to provide all the information and provide also documentation because of the compliance of KYC AML, is it a chance for them to at the same time feel safe and secured and when they're signing those documentation, like how we can combine the requirement of the compliance and the user experience?
We have different modes on our platform. Our primary distinction is the ability to capture your handwriting. So your original signature, as opposed to a proxy signature type to sign and click to sign.
Including messy handwriting?
Including messy handwriting, especially my messy handwriting. And the biometrics behind that are tracked. But proxy signatures were actually prohibited by the Ontario court system last year, because you don't really have the sense of anybody's identity. In theory, a cat walking across a computer, if they actually were lucky enough to get the names right in terms of spelling and then pushed accept, could create a digital signature if you're using type to sign. But I think that's the first line of defense. The second one is what we believe is integrated video. But thirdly, we are just launching and we have a open, either as an independent or as part of a financial organization. And you want to be able to verify that both people on either side of the transaction, if you have suspicion, are who they are, because that's your form of risk mitigation. And therefore, doing the ID checks, whether they're coming through the verification of a government certificate like Convergence.Tech is putting together, or existing documentation or future documentation, the digital avatar, as that may evolve and exist. We believe that the foundation of that is that you ultimately, in a video situation, even if you've had some exposure to the person in the past, you and I could have a conversation about today, 6 months from now, and you'd have a greater confidence that, that I was who I am, and vice versa. So I think we are going to find the real challenge is that, it's the criminality. Years ago, I used to advise Allstate, and they would every year take anti-auto theft devices into a prison in Illinois, and they would give them to 50 people who were in there for auto theft. And they would be given a opportunity to organize any tool they wanted. And they were listed and color coded and returned at the end of the process, obviously. But every year, and some of these technologies had only been in existence only for months, and some of the criminals had been there for years. Mm-hmm. Every year, the criminals could figure out and dismantle all of the devices in the cars within 10 to 20 minutes, because they asked them, they said, well, how do you know what's going on? They said, well, our buddies come to visit us. We read magazines. It's a profession. I mean, for them, it was a profession. And so I think we have to be cognizant that moving forward, that the real challenge for us is to prevent that risk that exists financially, and from a government's point of view, obviously going across the border. I mean, what I find Convergence.Tech working on potentially in terms of me never having to carry a passport again is quite exciting, because if you ever lost your passport, you know how annoying it is. But ultimately, the goal is not to have a document that you travel around the world with that you stress about. The goal is to be able to go across the border with a high level of confidence that you're not committing terrorist or criminal activity. And on the positive side,
when it comes to portable and reusable identity, how we can implement those ones for the users, and at the same time possibly have that data and for the personal use that people can monetize on it.
Yeah, it's going to be interesting to see where the industry goes with a lot of this. Again, if there's a foundational piece like a digital identity document or a digital driver's license that gets issued, that's one part of a broader identity system. As John is saying, when you need higher assurance, you need to add more layers. So the whole idea of being able to increase trust in various ways by adding layers to a transaction, that totally still exists here. This is just kind of like one slice of a possible solution, I would say, that can contribute to it. Because also, yeah, documents aren't going away. The attestations and signatures is kind of very, very much sort of core and center of all of these sort of trust technologies and all of these sort of digital signatures, including digital wallets, including signed documents and those sorts of things. So I think as far as where this would be going and how can people monetize it, that's going to be one of those open questions on what's the next innovation look like when you start dealing with privacy protecting identities as well. I think there's a lot of room for services to be spun up around this. Again, custodianship, even just making some of these sort of transactions easier and working with some of this information are definite elements. But then it is also a challenge in terms of, as people start using these privacy preserving technologies, or people start storing less personal information with a third party and just start saying, hey, is this document valid? I'm not going to store the contents. Yeah, it's going to create some real big challenges right now for IT that's so data hungry and based on analytics and mining customer profiles and the like. When that goes away, I think that next great spot for opportunity innovation is, well, how do you get some of these insights back, but in privacy preserving ways? So I think that's going to be an interesting space to watch as more of these digital identity wallets get deployed.
Well, there's definitely, we are all tempted by monetizing our information. If we're sharing that, we would like to be paid for it. But at the same time, there's still that risk. The more you share, the more exposure we have for identity theft and identity fraud. And there was many cases like that during last few years when it comes to the cyber attack, when the people's information pertaining to driver's license, to passports had been stolen, and nobody knows how they had been used. And definitely, like, the first ones are the criminals, and then the industries will follow. Definitely, when it comes to the protection of the identity, it's extremely important. And here we have also that information when it comes to Web3. So, John, what do you think? What are the Web3 opportunities when it comes to identification of a person, we talked about it like a little bit briefly, but is it like I would like to channel it directly when it comes to Web3? Because yes, there's an identity on the blockchain. We already using this in the fintech technology, but Web3, it's very specific when it comes to its feature of being decentralized. So how this decentralization can play a role when it comes to identity?
Well, I'd like to start off just, picking up on the last question. To me, there's two aspects of monetization, and one is to be a service provider, and the other one is to go in the direction that California is going, which is you cannot remonetize data. The new privacy law that went in effect is very strict about either giving discounts or their ability to resell data, because as soon as you start doing that, you start losing control over the data. So as a corporate policy on our side, we obviously don't resell or give discounts for any data, even before the law. And then on the more optimistic or positive side, from a corporate perspective of what Convergence.Tech or what we're trying to do, and others that are listening today, I think they're obviously creation of value added from either consumer's perspective or from the person holding the risk perspective that's compliant to the regulatory framework that they're operating in. And the second one is obviously being able to offer that at a level of service that allows people who are not, the Royal Bank of Canada or HSBC or some of the global players in the industry to take advantage of what same level of risk mitigation to their business requires, but they obviously don't have the depth of pockets and the depth of IT. And so that's, I think, for our industry and the audience today, that's the real opportunity. And I think, I'm not here to do an infomercial for Convergence.Tech, but I think governments even sharing IT systems, as we found in certain instances in Canada recently, and sharing experiences with the private sector is ultimately cheaper to the taxpayer. And that has to be the right balance, obviously, in terms of protection of privacy and getting the best. But I think we're going to find that when you have multiple client base, multiple user applications, and multiple jurisdictions in terms of countries and industries, you're actually going to have a much more robust product. If you just had Immigration Canada, for example, Citizenship and Immigration Canada digital token, you would have a very robust system within the confines of immigration, but you might not have the best system because you're not getting the pressures from the auto lending business or whoever else your client base is. So that's how we monetize it. In terms of the web, from my perspective, really what we see, and I'm taking the image again of the digital avatar, is a reverse pyramid that you ultimately have to start off, given the level of transaction, at a very low level of accreditation of the individual, what you need at Safeway to buy your groceries for $50 or $80 on your ATM card, or your under $100, $200, depending on your limit. It could be wireless, because they know, especially now, if you have the text message back to your phone, if you lose it, they can shut that down, and it's the risk of convenience versus the potential mitigation of financial loss when people do lose their credit cards or their ATM cards. The other end of that extreme is the pyramid grows. You might have to buy a refrigerator at $2,000 or $1,000, certain level of accreditation or KYC, IDV. And then as you go up to a house, as you go up to $1 million of crypto, $10 million of corporate debentures, you're going to have a growing pyramid across the board to make sure that what we call the pipeline of risk is managed in a way that is not interfered with, and that ultimately each step in that process, whether it's your accountant, your lawyer, your bank, has to have some level of confidence that that transaction is legitimate. And so I think that the web ultimately, and I think it's going to be a challenge, as we've articulated already, to come up with the right approach. But I think that the beautiful thing about the web is it allows you to have different tentacles into different pockets of data and different pockets of experience to build that pyramid and build that digital avatar. And ultimately, the individual and the person who's taking the risk, even if they have to be ahead of government through active consent, if I'm a currency trader and every day I need that confirmation, obviously I'm not going to wait for the SEC or the Ontario Securities Commission or OSFI, whoever happens to be the regulatory agency, to approve that. I'm going to demand that if you're working for Citibank and I'm working for Bank America, that you and I have our own level of confidence in terms of the authenticity, and that can come through obviously private terminals and a private VPN type construct. So I think it's going to be hundreds of cats and hundreds of mice trying to make sure that when they do catch the mouse, that it actually is a mouse.
Well, Erik, a question to you when it comes to the organization and governments, from your experience and dealing with those higher authorities and different companies. How would you say that they can prepare themselves right now for those changes?
Yeah, and that's the classic challenge with technology, being in technology and innovation space, is it's really the tech itself, and it's more the governance and policy around how you operate it. That's the part where, even if we are talking about creating portable digital identities that have multiple purposes across use cases, it really does come down to how do you build the trust frameworks behind it? How do you govern who can play in the system and who can't? How do you govern what an acceptable proof or proof token is, kind of thing like that. So there's definitely a lot of complex regulation and policy and privacy work that needs to be fed into some of this stuff. Again, I would say governments are actively investigating in a lot of cases, simply because people are starting to see personal data rights and privacy as sort of like a driving factor in a way you can protect citizens. Definitely in Europe. North America, it's probably not as prevalent, I would say, where people factor, well, convenience over privacy in a lot of cases. But still, then it raises the interesting question of, to protect citizens, should governments be adopting these sorts of principles and systems? In a lot of cases, I think they are. So like California is an interesting example as well, because they're doing some work on this sort of technology too, with verifiable credentials and identity wallets, and like very much in line with the whole protecting personal data rights that John was mentioning earlier with regards to being able to monetize and sell information. So I think it's starting to change. It'll take a while for people to sort of adopt these sort of ideas fully. It's not easy, but it is effectively leveraging something like the web in general and starting to create a digital identity layer that's kind of been missing from the internet. So there is a big opportunity here. Where it will go, who knows? Commercial factors usually end up driving things one way or the other as more companies get involved. But it is interesting to see where all of this might end up as soon as some of this technology gets deployed more en masse.
Well, definitely we are going to follow up what is happening further in fintech when it comes to bigger players, traditional players, but at the same time, a lot of new and upcoming fintech companies, and definitely how they are going to apply Web3 in the future endeavors as well, and how this is going to affect us. It is something definitely new. We starting Web3, and what we even saying right now probably will upgrade and update in the next few months, next few years, and we are going to see how everything develops. Gentlemen, truly such a fantastic discussion. Thank you so much, John, for participating. The same thing for you, Erik, and sharing your valuable information and your thoughts about fintech, identity, Web3, blockchain, and letting all the viewers know your point of view when it comes to that. And once again, John is from the company called Syngrafii, and Erik from the company Convergence.Tech. Both of those companies are absolutely fantastic, representing the highest of the technologies. Once again, thank you so much.
Thanks a lot.
Thank you. If we're back next year, you'll have to figure out how to verify we're the same people.
There you go. We'll work on a solution.
Okay. Take care.
Bye, everyone.